Phillips, and Stephen is a consultant. He's the co-founder of IMHOTEP, and I'm sure there's a other way of pronouncing that. But today, Stephen is going to be taking us beyond the acronyms. And these are acronyms that we've been hearing tossing around, may or may not have had a full appreciation of, exactly what they offer. And those acronyms include things like the metaverse and NFTs and DeFi. Stephen himself is a specialist in this area. He's an award-winning technology scientist. And while he has, there's all that educational background, I want to commend him for the work that he's done for key clients, including the central bank digital currency implementations for the Central Bank of Nigeria and the Eastern Caribbean Central Bank, the world's first and only CBDC deployment for a currency union. And Stephen, we look forward to having you, and we definitely look forward to having you explain this all to us. Thank you. Welcome. All yours.
Thank you so much, Renata, and I want to thank the organizers of the conference for inviting me to share and to shed some light on these key terms as we move into new technologies as the world becomes more globalized, and we can leverage new types of technologies to solve problems that we have here in the region. So I just want to say a few of these slides are pretty dense. I will warn you in advance which slides are going to be dense so that you can perk up in your chairs and get your notebooks ready. This is set to be a very exciting talk, and I hope you guys really enjoy. Feel free to connect on LinkedIn. I'll have my LinkedIn at the end, and you can send questions and we can collaborate. All right, jumping in. The first slide, I want to begin with a brief background on the history of the web. So the web has been evolving over the past 30 years. It first began where we had read-only, and it was very static. I don't know if many of you remember, but it was just about publishing on the web and reading information. And by the year 2000, we had Web 2.0. Which offered tremendous opportunities for businesses, primarily around e-commerce. This created very big centralized services. If we think about Google, Apple, Amazon, Facebook, where users would come to these platforms for products and services, and a lot of the information was centralized to those entities. As we move into Web 3.0, things change a bit. This is called the decentralized web, and this represents the latest generation of the internet, and services are powered by a distributed ledger technology. You can also think of it as blockchain. That may be a term you're very familiar with. But the key difference is here, this is now a token economy, and you will interact with Web3 products and services with a wallet and digital tokens. So we will touch on these terms in the next slide, and I am moving along. So here are some of the key concepts that we need to think about. Now, I did warn you, this is one of those heavy slides. And there are some key concepts here that we need to drill into to understand the implications for businesses working on blockchain or building products and services based on blockchain. So one of those key items is digital assets. Now I'll take my time here. A digital asset is anything that is digitally stored and available, which comes with a right to use and realize the value. So simple text or media in digital form, binary form, ones and zeros, is not considered a digital asset. It also needs to be accompanied by the right to use it, okay? So digital assets are transacted using those ownership rights. So if I'm sending something from, a digital asset that I own to someone else, not only am I sending them the ones and zeros, the digital form of the asset, but I'm also sending them the ownership rights as well. All right, so that's the first concept we need to be aware of. What are digital assets? Next up, we have some big words. Don't get nervous. Asymmetric key encryption or asymmetric cryptography. Now, this is a foundational concept for everything in Web3. So what this cryptography does is it uses two interrelated keys. One is known as the public key and the other one is known as the private key. One of them is used for encryption and the other one is used for decryption. The public key is the one that the sender and the receiver has access to. So it's shared amongst the stakeholders. Everyone knows your public key. The private key is the one that's confidential to the owner. And it's computationally almost infeasible to find a pairing of public and private keys. Now, this is primarily what blockchain is built on. This is what keeps everything so secure. Bitcoin, as an example of a public blockchain, has been around now for over 10 years, and no one, no government, no hacker has been able to break this cryptography. This is a foundational concept that we must all get. Now, there are two applications of asymmetric cryptography. One is public key encryption, and the other one is digital signatures. So digital signatures is another key foundational concept that I want to share with you guys. A digital signature ascertains a person whom he claims to be. It's an electronic document. It identifies the correctness of the sender and the integrity of the e-document. Digital signatures are equivalent and to a stamp on a paper or a signature on a paper. So you leverage these public-private key pairs to create these digital signatures. If you're the only one that has your private key, as you should be, when you sign with that private key, it kind of signifies that you are who you say you are, because your public key is available to all. And if only you have your private key, there's a relationship between those two keys that it can be verified that it has been signed by your private key. The next big concept we need to get into is asset custody. And this has lots of implications for accounting and business in general. So again, I'll try to take my time here. So unlike traditional assets, a digital asset can be held in custody by a third party. So this third party is called a custodian. Now, what does that mean? That means the custodian holds that private key. Again, we're talking about these asymmetric key pairs. The private key is the key that's used to move the asset. So an entity holding the private key on behalf of the asset holder, they're called the custodian. Limiting access to private keys is crucial. This is what it's all about. Only you should have access to your private keys. And when we think about businesses, they will need to make a choice as to if they want to leverage a custodian to manage their private keys or if they want to manage their private keys themselves. This is a term called self-custody. Okay, especially because depending on the type of distributed ledger, most transactions are likely irreversible. So if someone gets access to your private keys and uses them to transact your digital asset, it's likely irreversible. So when digital assets are held by a custodian, the digital asset should be recognized on the financial statements of the entity that has control over the digital asset. So again, we're getting into a little bit of accounting, just touching on it here. Determining which entity, the depositor or the custodian, has control over the digital asset should be based on specific facts and circumstances of the agreement between the depositor and the custodian and any applicable laws and regulations. In that regard, a legal analysis may be necessary to evaluate certain aspects of the agreement between the custodian and the depositor. Now, I'm focusing on custodianship and custodian services a lot because what we find is organizations generally are not equipped to have good governance controls and manage the cybersecurity risk that may be associated with managing private keys themselves. They outsource that many times to a third party who is specialized in that area and who may also be regulated based on the jurisdiction. Now, the form of agreement between a depositor and a custodian may vary, but it may also, it oftentimes includes terms and conditions that the custodian must adhere to. All right, so would the digital asset deposited with a custodian be isolated from the custodian's creditors in the event of a bankruptcy, a liquidation, or dissolution of the custodian? If not, do the depositors have a preferential claim? So those are some of the questions that, as in the accounting field, we need to be aware of. It's one thing if you choose to use a custodian, but what happens if things go wrong? They're the ones with the private key. So what happens if the business itself goes into bankruptcy? Another important question that I want to share with you is the fact that not your keys, not your coins. This is on screen at the bottom. It refers to the need to owning the keys associated with your funds. The person who has the private keys is the one who has the potential to move or spend or transfer those digital assets. So you should only be leveraging custodian services from a high trust organization. Whoops, let's get back on track here. All right, so one other important point here is that in regards to the legal analysis, we need to evaluate the legal agreement with the custodian and do the terms of the agreement between the depositor and the custodian indicate whether the depositor will pass title, interest, or legal ownership of the digital assets to the custodian. All right, so these are some of the important concepts to consider. On the next slide, we move into central bank digital currency. So I wanted to contrast quickly before I move on the difference between crypto assets and a digital asset, a central bank issued digital asset. So crypto assets will not meet the definition of cash or cash equivalents. So that means you need to account for them differently. When they're not considered legal tender, and as mentioned before, some jurisdictions have made a move to recognize Bitcoin as an example as legal tender. They're not backed by a sovereign government. So that means there's no centralized entity that is backing this crypto asset. So crypto assets typically don't have a maturity date. They traditionally have experienced price volatility. And right now, you know, the markets are down. So a lot of crypto assets have lost a lot of value. And this differs dramatically from a central bank digital currency, which in many implementations is very much like a digital version of cash. So that's it for that one. Next, we move into the future monetary system as defined by the BIS, the Bank for International Settlements. And here we will talk about central bank digital currencies briefly. So a CBDC in its simplest form is a digital payments instrument denominated in the national unit of account, which is a direct liability on the central bank. So that's super important. What we're saying is this is a digital asset. It comes with all the asymmetric cryptography we just talked about. The need for custody, the concept of custody is directly relates to this as well. In order to move a digital asset, you need to sign with that private key. So all of the concepts we touched on previously relate directly to CBDCs. Now, we have three CBDC deployments in the region. We have Jamdex in Jamaica, Bank of Jamaica, and the Jamaican government just recently made a move towards having Jamdex as legal tender. Super important for the Jamaicans on the call. All of the concepts of custody services and what it means to have a central bank digital currency as legal tender come into play. We also have Sand Dollar in Bahamas, Central Bank of Bahamas, and we also have the Eastern Caribbean Central Bank with their ongoing Dcash pilot. So quickly, I'll touch on some of the benefits. Some of you may want to understand, why are central banks moving towards central bank digital currencies? So the potential benefits are CBDCs provide a safe haven asset with direct access to the central bank balance sheet. And this allows households and businesses to hold a digital form of cash, a digital form of money that is a direct liability on the central bank. This has the potential to increase competition, facilitate financial inclusion, and broaden access to digital payments. So the diagram on screen is kind of a metaphor or a vision of the future as defined by the BIS. And here what we see is central bank money, M0, kind of is the very strong trunk that holds up this beautiful canopy of financial innovation, financial products and services that will create the next monetary system, the next generation of an economy, so to speak. So here, this infrastructure as a public good, it facilitates financial innovation by lowering barriers for access to new products and services. Some of the frictions around banking in the region are reduced because you no longer need a bank account to access this digital form of central bank money. So this canopy of products and services is unleashed, and we can have financial innovation, new entrants into the market that want to provide new products and services to solve real problems within our individual jurisdictions. So as a tangible example, we have Dcash in the ECCB, which I'm intimately familiar with. It's a currency union. We have 8 sovereign territories that share the same currency, and they have many frictions for moving money across borders. It's very costly, and it takes sometimes 3 days to move money from one bank in one jurisdiction to another. With a CBDC, those movements of capital can be done instantly or near instant within a few seconds, and the cost is significantly reduced because it becomes a peer-to-peer transaction. There is no intermediary. We're not using SWIFT and going through US dollars in New York or wherever and then coming back to the Caribbean. It's instant, and the counterparty gets their money. So again, this all happens using this asymmetric key encryption. When you go to the cash register and you scan the QR code and swipe to send that payment, you are literally using your private key to authorize the movement of those funds from your wallet, your digital wallet on the blockchain, to the counterparty's wallet. And now their private key is there associated with that asset that they now have control. They now have digital ownership of that asset. All right. So moving on, another key concept that you may be hearing a lot of is decentralized finance, or DeFi for short. Now, this is a broad umbrella term for financial services on public blockchains, and primarily Ethereum. With DeFi, you can do most things that banks support: earn interest, borrow, you can lend, you can buy insurance, you can trade derivatives, you can trade assets, and more. Now, the reason why there's a lot of hype around this decentralized finance is that it's faster and it doesn't require paperwork or a third-party intermediary to leverage these products. As with crypto generally, DeFi is global and it's peer-to-peer, pseudo-anonymous and open to all. This system removes the control of banks and institutions have on money, financial products, and financial services. Of course, this space is still evolving, and DeFi and its regulation are still under development. DeFi uses emerging technology to remove those third parties, like I said, and the components of DeFi are stablecoins, software, and hardware that enable the development of these applications. So I mentioned another term there, stablecoins. What is a stablecoin? A stablecoin is a crypto asset that represents a real world fiat asset. So there are very popular stable coins like USD Tether and USDC offered by Circle. And what this is a crypto representation of a fiat asset. So one USDC relates to one fiat dollar, US dollar in this case. So what that really does is provides a bridge for traditional finance to get into the crypto space, because financial institutions, payment services providers, money services businesses, they can now offer access to stable coins. So businesses, individuals can convert their fiat dollars to stable coin, USD, T or C as an example. You convert one US dollar fiat on your bank account to a USDT crypto asset on your wallet where you have the private keys as an example. And now that allows you to participate in the DeFi ecosystem. You can lend that crypto asset, that stable coin. You can purchase another asset. You can participate in a whole ecosystem of products and services that you can leverage. So that stable coins are very important as a way to get into the DeFi space, and then also to get out. So let's say you were lending, you created, you converted some of your fiat to a stable coin, and you went into the marketplace. You saw a product that you liked, and you generated some yield on that product, and now you want to realize that yield. You would use the stable coin to convert that crypto asset back to traditional fiat money in your bank account. So that's what the stable coin really provides, a bridge. And I encourage the audience to definitely research some of these topics some more, as you know, I'm limited by time here. So next up, we will touch on another key concept, non-fungible tokens. Now this has the rise and the popularity of non-fungible tokens has been amazing in the last few years. However, these technologies have been around for a very long time, as far back as 2016, 2017, but they've been made very popular recently. Non-fungible tokens are an evolution of a relatively simple concept of cryptocurrencies. So fungibility is, if you look up the definition, it's about being able to exchange it one-to-one. So by enabling digital representation of physical assets, NFTs are a step forward in the reinvention of cryptocurrency infrastructure. Their value lies in their exclusivity and digital ownership. So digital ownership here is one of the key concepts. So unlike Bitcoin or Ethereum, which are fungible, they can be traded for one or another. So it's just like having a $100 bill in your wallet. $100 bill, for all intents and purposes, is the same as another. If you look closely, they each have a serial number which uniquely identifies them, but I wouldn't overcomplicate it. $100 bill is the same as another $100 bill. NFTs are unique. They're one of a kind and they are different. So that's what it means when you say it's non-fungible. Okay, they are one of a kind and they are digital trading assets. So the built-in authentication and digital signature, again, digital signatures is one of those foundational pieces, serves as proof of ownership. So you have the private key for this non-fungible token which sits on the blockchain. It proves that you are the digital owner because you're the only one who can move or give that NFT to someone else. So you are the owner. Given the investors bragging rights, and some may say are more worthy than the digital asset itself. Because NFTs are stored on the blockchain, they are immutable and cannot be duplicated. This makes them attractive to collectors and investors as they can be sure that they are buying a unique asset. So let's get a little more practical. Examples of NFTs beyond the Bored Apes that you see, the example you see on screen, include music, and an artist that has made some strides in this space is Chantel Lane, who, according to, she's a Bayesian artist, so that's why I chose her. According to a US Today article, she launched the project in 2021 using NFTs to directly connect with her fans via an online auction. So how does she leverage this NFT? She allowed the highest bidder receiving an NFT to have special rights to her content. The owner of this unique NFT can redeem it for several exclusive items, including a cameo in the video that she would shoot for her song House Party, and their name included in lyrics of another version of the song. So owning an NFT is really around the status symbol, and we can see that they're highly configurable through smart contracts, which are self-executing pieces of code on the blockchain. So, you know, she has implemented this technology in a way that brings her closer to her fans and to provide some value to the fan. So to give it, to walk you through how this works, I know some of you may be asking, okay, but how does it all work? Let's say you purchase some Ethereum, you use your credit card, you went on a crypto exchange, you funded your wallet, you purchased Ethereum. Then you will go to the auction site that's hosting this auction for Chantel as an example, and you can place a bid. Let's say you won the bid. So now what happens is you would sign a transaction that will now transfer your cryptocurrency to the auction house, and the auction house would then make you the digital owner of that of that NFT. Now, because you're the owner of the NFT, you now have the exclusive rights to all of the things that have been programmed into that NFT. So being included in the video, you can now prove that you're the one who should be included in the video and have your name in the lyrics of her song. So that's how it works in a nutshell. And I encourage the audience again to go do some research and to learn these types of assets are going to become more and more prevalent. But again, they're all kind of rooted in the foundation of digital signatures, digital ownership, and custody. So next up, we move quickly into a view of the metaverse. So the term metaverse was coined in a book called Snow Crash, and it was first published in 1992 by an esteemed author, Neil Stephenson. And it describes a future iteration of the internet made up of persistent, shared 3D virtual spaces linked into a perceived virtual universe. All crazy big words that I'll explain in the next slide. But however, the metaverse represents really the merging of multiple technologies, namely virtual reality, augmented reality, and extended reality with the real world. So we will touch on this next. It's important to note that the metaverse represents a huge opportunity that no investor should ignore. The potential total addressable market is over $1 trillion US. So it's made up of persistent shared 3D virtual spaces. So let me break that down. Imagine you're playing a game and your stomach is growling, you need to go get something to eat. You hit pause, you go get something to eat, you return, you press play, and nothing has changed. You know, the game is exactly where you left it. The term persistent means that there is no pause button on the metaverse. What's happening there is happening. It's like a whole universe in of itself. You can join in and participate, but when you leave, everything is still going on in there like a real universe in the metaverse. So it's a 3D virtual space. On screen, you can see Horizon workrooms where Facebook or Meta has created some products to allow for teams to collaborate in a way that they traditionally can't collaborate using traditional products in Web 2.0 like Zoom, etc. Here you can interact directly. You can collaborate you can collaborate in spaces directly with other individuals who are also into metaverse. So you can create things together, much like you can with a traditional conferencing technology like Zoom, etc. On the left, you see the Barbados flag there. So we see governments and a big push to offer products and services, where the Barbados government, as an example, has made a move to create a consulate in the metaverse to offer products and services within the metaverse. So the metaverse in a nutshell is a place where you can interact, work, shop, play games, and gather for social events or create content itself. Bill Gates has predicted that within the next 2 to 3 years, Zoom meetings will migrate to the metaverse, just simply because of the richness of the experience that's possible from this 3D virtual space. Now, there are tons of top brands moving into the metaverse, the likes of Coca-Cola, Nike, Microsoft, Louis Vuitton, Facebook, Meta, Disney, and the list goes on. Now, they are moving into this space simply because they recognize it's a new opportunity to interact and forge stronger relationships with their customer base. All right, so I think that's it. The last slide is just a summary. We want to bring it all together. So we examined the evolution of the web from 1.0, which was static web pages, to 2.0, where you could interact, but it was very centralized, now to 3.0, which is powered by these technologies offered by distributed ledger technology, digital signatures, digital ownership, digital custody, asset custody, as key considerations that businesses will need to think about as we move into this new digital space. Next, we examine the future monetary system as described by the BIS, rooted in a foundation of public infrastructure offered by the central bank. Then we looked at how that contrasts with DeFi, where we have financial products and services offered in a distributed public blockchain. We also touched on NFTs. We talked about how digital ownership really created value in NFTs. And we finished with a brief look on the metaverse, examining how these digital worlds can be leveraged for new customer experiences and virtual products. And I neglected to mention that the metaverse is definitely a Web 3.0 product or implementation, because you leverage the metaverse through your through wallets and digital signatures. It's all about interacting in that virtual space. So let's say you can buy something, you can interact, you use digital assets, you use your digital wallet to sign transactions, to transact. So the metaverse is a clear example of one early product that leverages Web 3.0. All right, so that's it. I hope you guys really enjoyed this introduction to Web 3.0, and I hope I was able to demystify some of these critical concepts like metaverse and NFTs and DeFi. And I want to open the floor for questions. So back to you, Renata.
Thank you very much, Stephen. And, having sort of laid the foundation for us, I guess our first question is, what is the real value of these acronyms? I'm still going to call them acronyms, but metaverse, NFTs, DeFi, to businesses and to individuals?
Sure. So the real value comes from the opportunities that they present. Opportunities in new ways of doing businesses, opportunities for wealth generation. It's all about how we can change the way we do business, how we can change how we think about finances, and create wealth, create new products and services that can really capture capture the minds of the world, and also disrupt how things are being done today. We know that there are tons of problems with traditional financial services, and these technologies are born out of a push to solve some of these problems and create new experiences that are more fulfilling for the average individual. So for example, DeFi, decentralized finance. This creates an opportunity for individuals to diversify their portfolios, their investment portfolios, and leverage some of these higher yielding DeFi products. You can stake cryptocurrencies and various other things to generate wealth, and in a way that traditionally you wouldn't have the ability to do so. So the real value is really about getting involved and being at the forefront so that you can capitalize on these technologies.
Now you've led projects in the Caribbean as well as in Africa. Can you tell us about a little bit? And more importantly, right now, because they are in market, how utilized?
Sure. So as you know, trailblazing is always very difficult. You're the one that gets to make the mistakes and others sit by and watch. So it's a very difficult thing. Humans traditionally are difficult to change. In the region specifically, our economies are very cash heavy. There's lots of cash in circulation, and this creates limitations for economic development. So that's why you have the Eastern Caribbean Central Bank, as an example, choosing, and also the Bank of Jamaica, that was one of their key motivations, choosing to create a central bank digital currency because it can solve some problems for financial inclusion and as well as financial innovation within their economy. Now, that's not to say that build it and they will come. There is a bunch of convincing and sensitization and financial literacy that is required. As I mentioned with the asymmetric key encryption, the private keys are very important. So who has the private keys basically has the asset, has the money in a sense. So there is a big need to kind of educate the population so that they don't become susceptible to cybersecurity threats, etc. So in a nutshell, I would say that it is challenging. Accounting for these digital assets is also something that financial institutions and commercial entities also need to think about. But the opportunities are there. Opportunities for lower barriers for products and services like e-commerce, and being able to diversify business models as well. Businesses who traditionally were cash-based can now offer their products and services online. And these build up the motivations for central banks to, for lack of a better term, stick their necks out there when the developing world really hasn't, and help to drive the economic development of the region. Briefly, to touch on the Central Bank of Bahamas, their motivations are really around how diverse and dispersed their archipelago is, where the proliferation or the distribution of financial services is very low. So for instance, I think they have a huge number of little islands where people live. And of course, the commercial banks are not putting a bank on each of these islands. So they needed a way to solve those problems and be able to get cash to people and allow people to transact remotely. And a central bank digital currency provides a real safe haven asset for people to feel comfortable leveraging this technology provided by their central bank to help facilitate and solve some of those problems with making payments and getting access to funds.
Central bank digital currency regulations expand, and the fit that it has, for transactions across the world.
Sure. So the research is still ongoing for creating new global infrastructure for the movement of funds using these new rails, so to speak. The BIS has done a number of experiments. One of them that I particularly like is called mBridge, which looks at how CBDC from one jurisdiction can be exchanged for CBDC in another jurisdiction. And this is a concept, this is a problem that we share here in this region, where interregional trade leverages international rails that exist today that require the use of foreign reserves. Things flow through to US dollars, and that creates limitations in the speed of doing business, and also it's just a huge friction. So with regards to regulation, each sovereign jurisdiction will have their own regulations. As we've seen, the Eastern Caribbean Central Bank is still with an ongoing pilot. The Jamaican Central Bank of Jamaica, they have made a move to have their digital asset JAMDEX as legal tender. So it really comes down to what a particular jurisdiction is doing and how quickly they want to move. But in a nutshell, it's central banks generally want to distribute their digital asset through intermediaries like commercial banks or other licensed institutions. That gives them a governing authority to help regulate and evolve the technology over time, leveraging intermediaries. Central banks generally don't want to service the general population directly. However, there is still a need to create this open market where we can see that financial innovation, and you're not just left to what the banks decide to do. That's one of the key opportunities here that CBDCs offered. It's something offered by the central bank themselves and not a commercial bank. So the central bank has the opportunity to open the infrastructure that new players can come in and offer products and services that a traditional financial institution may not be interested in.
Question, and this is putting you on the spot. There are central banks that are more enthusiastic to embrace digital currencies than others. Others appear to be still very risk averse. What's pushing that? What's pushing the enthusiasm for those who are seeking to embrace?
Sure. So this comes down to the problems that the central bank is trying to solve within their jurisdiction. So yes, the enthusiasm is there from the ECCB, from Bank of Jamaica, from the Central Bank of Bahamas in the region, and also the Central Bank of Nigeria. And oftentimes we see a disparity in enthusiasm between developed nations and emerging economies. Now, the developed nations already have digital payments infrastructure. They already use a reduced amount of cash for payments. You think about traveling internationally, a lot of people already use cards. They already make payments on their phone, etc. So there's already a ecosystem built up around digital payments, and financial inclusion is not as big of a problem. So you see these developed nations looking at solving problems maybe more at the wholesale layer and less at the retail layer, because the retail layer, digital payments may already be accessible to the general public. Within our region, we find that, as I mentioned before, there is large amounts of cash usage, which has implications for economic development. So we see central banks here wanting to make a move to deploy this digital infrastructure, this new monetary infrastructure, to offer CBDCs so that they can start to bridge those gaps without needing to rely on licensed financial institutions to do that. Of course, these institutions have their own roadmaps and their own paths for what they want to target. But in general, central banks are focused on consumer protection and economic development, financial stability. So in some cases, they see their mandate for providing this infrastructure so that they can help bridge those gaps and create financial inclusion and financial innovation that can then drive economic development. And businesses, you may, if you think of it, a tangible example, you have a pizza shop and you're making pizzas, and traditionally there's a high risk for you to make a pizza, then you send out the guy to deliver it, as an example, and then you can't find the person, or they don't have the money or whatever. Imagine a way where the individual can pay online using a central bank digital currency even before the pizza goes in the oven. So businesses can now capitalize on these opportunities in a way that they couldn't, where some portions of a society in the region may have access to a Visa debit or a MasterCard, but it's not ubiquitous. Whereas a CBDC lowers those barriers, where everyone can have a digital wallet on their mobile device and they can participate in this new digital economy.
Thank you so much. And I know, the industry goes through a lot to explain the difference between a central bank issue digital currency and crypto. We do, however, have a question via WUVA to pose to you that sounds a little bit more crypto centric to me, but I will ask it. With the collapse of Terra USD and Luna as stablecoins, can investors trust stablecoins? And we're going to put stablecoins, quote unquote.
I love that question. So yes, stablecoins, as I mentioned, are a very important bridge into the crypto space. As I mentioned during the talk, you convert your fiat into a stable coin, which is a crypto asset, and then you can then trade that crypto asset for other crypto assets, products, or services. So they represent a very important bridge on and off ramp to crypto. Now, the whole concept of trust, what I will say is stablecoins are products in and of themselves. All stablecoins are not created equally. So it's down to the market to investigate the stablecoin and to know what know the product that they are using. Trust in stablecoins is built up around the one-to-one backend, the reserves. So there's been new regulations and proposals by the DFS, as an example, which is the regulatory authority in the state of New York in the US, that puts some stipulations around what type of assets can back a stable coin. So they are considering deposits within FDIC, federally insured US banks. So you have deposits that match one-to-one with the crypto assets on the blockchain. That way, there is confidence in the market that if I need to exit the stable coin, I need to convert back to fiat, the fiat is readily available. But there are problems with auditability, as we've seen with USDT and others, where they may produce an audit report once a month or once a quarter. So there is some level of risk. I'm actually involved in a project which seeks to solve some of these problems with the new stable coin. So more on that if you follow my LinkedIn page.
And we absolutely will follow your LinkedIn page, Stephen. Let's just move from currency right now to, I want to move to NFTs for a second. Bill Gates this month launched an attack on digital assets. He said that crypto projects like NFTs operate on the theory that there will always be a greater fool to sell overpriced securities to, and that's actual quotations. What are your own thoughts?
Yes, there is some truth, and some of it I don't necessarily agree with. I think that the digital ownership, if there's a demand for something, the value is going to go up. Some of it is a bubble. There's hype and people get excited and the price rushes up, but that doesn't mean there is no value there. So if you remember the example during the talk of what Chantel as a music artist and as an example is doing, there's tremendous value in NFTs for bridging the gap between artists and their consumers, their audience, so to speak. It also removes intermediaries where an artist is now treated more fairly. So let's say you create a digital asset. The whole concept of piracy and loss of revenue for artists is very important as we think about our own regional musicians, whether it's Trinidad or Jamaica, etc. There's a large loss of revenue. Your music is playing on the radio and there is no, revenue coming to you really. So these type of NFTs, as an example, when implemented properly, can help to bridge those gaps. Imagine every time your music played on the radio, because you created it and it's on the blockchain, every time it played, a fee was going to the artist that was the digital owner. So these types of technologies can solve real world problems. Right now it's all about the apes and other stuff, which may seem a little gimmicky, but the fundamentals of the technology is there. And then with regards to cryptocurrency, I think it's important for everyone to note that because cryptocurrency exists outside of regulation, it's a peer-to-peer network that can't be controlled. There's no governing body. It has value, especially in times of distress globally, where you can transact. What happens if Swift goes down? What happens, you can still send someone Bitcoin to make a payment. No one can stop it. It's maintained by a global network of computers running in houses like mine or yours and big farms. So there is intrinsic value for being able to autonomously transact without the need for a bank account, etc. So Bill Gates, as an example, in the early 90s, when he had to explain the potential for the internet, people just thought it was, oh, you can publish something online or whatever, and look how far we've come. So the point that I'm making is that these technologies are still in their infancy, and as we see Web3 evolve and we have more of this decentralized web built on blockchain technology, where digital signatures, custody, and these concepts I touched on play a bigger role, you will see more tangible, more valid use cases beyond just having a piece of artwork. Musicians, artists, they're generating real revenue each time their artwork is sold. They continue to earn revenue from that sale, and various other opportunities as well for real estate, various other things. I think you're muted, Renata.
Yes, I was having a whole conversation to myself, but I was referencing a recent other conversation I had with another Barbadian artist, Halik Mall, and he was saying how important NFTs played a role in the copywriting of his music, that he was having a huge challenge with locally. So once placed on that system, he was able to control that. But he himself describes himself as an artist as a Web3 superstar. What's that all about? We're seeing a lot more musical artists claiming that title.
Yeah, sure. And I think it just comes down to the value that they are able to realize above and beyond what is available today. So they are able to leverage Web3 to connect directly with their audience, publish their art, whether it's music or artwork in digital form, and have more control. Traditionally, you would use, a publishing company, or you have producers for music and publishers, etc., who take a cut, and they're the ones with digital ownership, and the artist is left to take the scraps. Whereas now, this technology, blockchain, it removes those players as much as the artist wants and allows them to connect directly with their audience. It allows them the flexibility to create the conditions, leveraging smart contracts on the blockchain for how they want to share their work. So for example, one artist may choose that if you buy my NFT for my song, you have full ownership. Another artist may choose that every time this song changes hands, I get a royalty. The flexibility is there for artists to work and to create revenue streams for themselves that weren't there before. So that's why a lot of artists are getting involved and calling themselves superstars and branding themselves in the Web3 space, because it's a real opportunity for them to change the narrative and create products and services like Chantel, offering, the winner of the bid for the NFT to be in her song and whatever, to just be creative in new and different ways to really connect with their audiences.
Got it. We have two additional questions in WUVA. Andrea St. Rose, I cannot get over the concept of Bored Ape Yacht Club, valued at US 248. Can I take some of my unique paintings and auction as an NFT?
Yes, this is tricky, because you have if you're the artist, then yes. If you are not the artist, you definitely need to get the actual artists involved and get their permission to do that. It's all about ownership. What the blockchain provides, what NFT provides, is verifiable proof as to who the owner is, and in some cases, as I mentioned, who the actual artist is. So what you see many artists doing is creating digital content that directly and on the blockchain. So you create a digital image, whatever, and you place it on the blockchain so that everything is on the blockchain and there isn't a physical counterparty to it. So imagine if you have Mona Lisa as an example. You may have the original Mona Lisa painting, so you can scan that painting and create an NFT, but it creates complexities around who is the owner. There's something physical as well as something digital. So what you see is artists generally will have a digital version and not a physical, so that it can all be managed within a digital space.
Okay, I see you and I are both getting time checks. So quick response to this question. Can cryptocurrencies facilitate money laundering and terrorist financing? That's a big one that I just asked you to answer quickly.
Sure. Yes, I would say any form of currency can be used in nefarious ways, and there have been some amazing strides in regulation from the FATF and other global regulatory bodies through the crypto travel rule and other new regulations that help to reduce that risk. However, traditional banking also has similar risk. So the risks are there, but it's not to demonize cryptocurrency. As the space evolves and regulation catches up, we see there are a lot more regulated opportunities for investors and markets to get involved.
Point taken. Thank you, Stephen. And final question, because we've not touched too much on the metaverse. Barbados very early on announced its intent to be the first in the world to have an embassy in the metaverse, and others have since made similar declarations. How real is this, and can it add value to the host and to the user?
Yes, definitely it can add value. It can offer a new outlet for Barbados, as an example, to share its tourism product and to offer services. Imagine you can go into the metaverse and go into the consulate and tackle issues that you may have around your passport or visa. Maybe that's an application, maybe that is learning about products or services that the immigration may have in Barbados, etc. Maybe it's just an experience of Barbados that you can have through the metaverse. So the opportunities are there, and this is very real.
Thank you. Stephen Phillips, consultant to, I guess, several territories in terms of the implementation of digital currency. We thank you very much for your explanation of some of those acronyms that we've heard. Hopefully, our audience has a better appreciation as to the meaning as well as the impetus. We thank you.
Thank you.
You're welcome. Ladies and gentlemen, next up on our agenda, we continue the conversation on the digital economy. We are going to look at understanding the digital economy in the Caribbean. And leading that session is Sarah Radikissoon. Sarah is a digital transformation strategist. She works with agencies, startups, and global enterprises alike. She's an expert in digital strategy, analytics, conversion rate, organization, growth, and more. She was the head of financial services at Digicel, responsible for the strategic direction, vision, and growth of their mobile wallet application products in Trinidad and Jamaica. Prior to this, she is known for her success at Unicoma Caribbean, specifically the growth of their consumer finance business, with special focus on the digital transitioning of customers to mobile application products. So, Sarah has quite a diverse range of Caribbean experience, and we very much look forward to the conversation that we are about to have. Sarah, welcome.
Hi, Renata. Thank you for having me.
Thank you very much for joining us. And we just had a conversation with Stephen. Hopefully, he helped lead a bit of our foundation for our talk. And the first question that we had for you as we seek to understand the digital economy in the Caribbean, what is a digital economy? And beyond the definition, how does it really work in the Caribbean space?
So I would say the digital economy is an extension of our current traditional economy. It uses digital networking and communication infrastructure to provide a platform over which people and organizations can do business. So to simplify it, it converts things in the physical world to a piece of information, a data point. And I would say the most common examples we have are like Amazon, Uber, Airbnb, and those are examples of organizations that convert physical items into or things into data points in which customers can purchase. And on the Caribbean side, we see, I mean, unfortunately, not a large presence of this, but we see it in organizations like Food Drop. Excellent Stores now has an online platform in Trinidad. We see PriceSmart has an online platform, and then there maybe on the smaller end we see a lot of restaurants and even in the healthcare space, we definitely are starting to see that emerging in the Caribbean.
What is driving the adoption?
What is I would say right now the changing facet of the Caribbean consumer. Right now, the Caribbean consumer is not who they used to be. They want items more instantaneously. They want things customized, more, I would say, contextualized to their situation. And when I say the customer, I don't just mean me and you. I mean business to business customers as well. I would also say the nature of things, right? So, right, the last number I have in front of me is 77% is smartphone penetration in the Caribbean, and just from persons around me, I'd probably assume it's much larger than that. And even further to that, even further to that, I would say the amount of
I hope that Sarah comes back on very soon.
Hi, sorry, Renata. I'm calling
Okay.
live from a hotel, and it seems to be a glitch in the internet.
And telecommunications is essential to powering all of this with the digital economy
Correct,
and everything
correct.
else we've discussed.
Yeah, actually, I'm also extremely jet lagged because I was part of this travel get on that's making the
Yes.
the news. So I got in at 4 a.m. this morning. I mean, connecting to the digital economy and how we purchase things online,
Mhm.
there seems to be a lot of chaos happening in the world right now. I was saying, so further to that is also the falling costs of mobile phones and access to the internet. And now the concept of the internet is becoming utilitarian. It's a utility in every household. It's the equivalent of water and electricity. So what's driving the push for more access to the digital economy in the Caribbean is that the nature of the Caribbean consumer and our access to digital outlets that we never really had before.
Thank you. What are some of the challenges facing the digital economy in the Caribbean? I think you may have just entered yourself into that conversation by making that point.
Well, first and foremost, it's our robust regulations. Across the Caribbean, I think our central banks are now getting on board with the concept of virtual money and mobile wallets. And our legislation with regards to that is a little bit more robust than the rest of the world. So it provides challenges for companies to come to market and compete with global players. Maybe I would say also digital infrastructure. There are parts of the Caribbean that are still without the infrastructure that is needed to run the internet and have a sufficient amount of I mean, definitely less spaces than more. I mean, Caribbean is definitely a much more advanced space than people make it out to be. But there still is those gaps. Um, the ability for, I guess, customers to be trusting of this product because it's still new to us, especially from a money standpoint. I would say that that's definitely one of the challenges facing is the facing the Caribbean customer adoption of this product is trust. An overarching digital development strategy. So one of the major things that we underestimate with a company like Amazon, for example, is that yes, they seem as if they're a huge online platform, but to be honest, that's probably one of the smallest advantages to a company like that. What's big about a company like that is the huge logistical monster behind them. And it's the ability to connect that type of strategy with an e-commerce platform that's still kind of new to the Caribbean.
Thank you so much for that. In your bio, you have a statement that struck a chord with me, and I would like you to elaborate on that. 21% of all Trinidadians have no financial identity or credit score to speak of. I am passionate about helping the financially underserved. And I appreciate that that is your passion, but also is it that the financially underserved are the ones who can also benefit from the digital economy?
Oh, for sure, for sure. Maybe I should dig further into the question you asked before with regards to challenges. Another one of the challenges would be low digital payment penetration. So how you interact with an Amazon or how you interact with PriceMart online or Food Drop or etc. is using a Visa debit card, a Visa credit card, Master credit card, etc. So all these companies do is they set up a payment gateway, and then you as the customer has to interact with this payment gateway via some form of payment. And it's your ability to have access to that in the first place that now that you need to get out of the way in order for you to participate in the digital economy. So coming back to that statement that 21% of people are what we would say as unbanked, and 21%, to be honest, but is still not a bad number. So I don't want to make us seem as if we're totally out of it with regards to financial inclusion, but there is still 21% of us that does not have a financial identity, that is not banked. And then within the 80% of persons who are banked, there's a particular portion of Trinidadians that are underbanked. So meaning that they have a bank account, but they don't really use it to its full potential. They don't have credit cards. and there's definitely a room for improvement, and when that improves, then we have more access to participate on what is the current digital economy. But more and more, the space is changing internationally. So for example, there's a company called Tala, which is a lending company in all over the world, and their focus is lending to people who you would not typically lend to. So for example, they lend in far reaches of Africa and India, where you could really only truly only communicate with people via smartphone. There isn't a lot of infrastructure, etc. And I mean, their technology is highly invasive, right? So how you would normally onboard a banking customer, which is via some sort of KYC form, they onboard via access to your phone. So they look at, your call logs. So to Renata, you say, hey, I'm a teacher, and from some software that they run through your phone, they kind of verify that information. So it depends on where your opinion is with regards to privacy and access. But on this topic, I kind of sway to them because of just that ability it gives somebody who would normally not have any access, who has educational gaps or generally intimidated by banking, to have more access, and without a credit card, without a credit score, without any real credit history. And it's now slowly letting them build that. So definitely, yes, to answer your question, I see a connection with the expanding digital economy and letting the people of the Caribbean be more financially included in a very basic sense. Before we even talk about cryptocurrency and all of these more complicated things, there's still a foundation with regards to financial literacy that needs to be expanded.
Thank you for that. And that in itself is a huge benefit of having a cashless economy. Are there other benefits that we should be aware of?
I think for sure I would say, well, currency fraud, for example. If there's cashless, there's no currency to fraud, right? There's no cash fraud to happen. There's definitely more transparent systems, more frictionless payments, effortless payments, and definitely you allow businesses who would not normally have the opportunity to participate on an international scale, the ability to do so. So now somebody sitting at home in Barbados or Jamaica or Trinidad can, because they're participating in digital economy in a cashless environment, they can participate with somebody who wants to buy their product from South Africa, from America, from wherever, otherwise would not have had the opportunity. And there's also an element of lower risk, and this is also quite a controversial opinion, but so there are two schools of thought, and one of them being you can easily block a credit card and flag an issue with a bank, versus if Renata steals your cash, it's hard to find Renata and get back that actual physical cash. I mean, obviously there are other disadvantages to risk and whatever, but I'm in the vein of answering your question as to what are the advantages.
Thank you. What should Caribbean business owners educate themselves about regarding the digital economy? If I'm a business owner, what should I know?
Well, one for sure, you should try to understand the changing customer landscape. My younger brother, who in my brain is sometimes 15 years old, was explaining to me recently that he's been reading on managing the Gen Z. And I was just reading on managing millennials. So, so I think the nature of customers and the psychology of customers are changing on a daily basis, and educating yourself on that is key. Like as we discussed earlier, customers want contextual and personalized business. I definitely do. Like, so I would shop 10 years ago on people's advice as to, okay, well, this is a more quality product, this brand is a good brand, etc. Whereas now I find myself shopping where it's easier. where the whether it's a small place or a larger organization, wherever it's easier and it works out for me faster, that's where I lean towards. And I think more and more customers think like that, right? So from a business perspective, I would say that it's key for business owners to educate themselves with regards to that. um, I would also talk about acquisition costs and understanding the impact of social media, email, WhatsApp, and other avenues like that, that we business owners know, if they adapt to these types of methods, their cost of customer acquisition can be significantly lowered. And then, as I mentioned before, I would say the coordination of, which I think is probably the biggest thing, the coordination of supply chain and inventory with your e-commerce platform. So connecting your, yes, it's nice to have a fancy website and onboard your customers in one direction, but then the other side of the P&L, which is how do you make sure that you get that quality product out in a timely fashion, get payment, and connect the entire loop.
Gotcha. And as a business owner, do I need to ensure that someone on my team, for example, has the skill set to deal with this? Do we have the skill sets in the Caribbean to innovate and to implement to support the digital economy?
Well, my answer to do we have the skill set in the Caribbean, dot, 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 is always yes. Um, I think that we have the skill set to do anything. Um, but to answer your specific question, definitely for sure, supply chain. Maybe not depending on the nature of your business. You may vary on how sophisticated you want that person to be or on that topic, but from whether you run a mom and pop small shop, to a large, a large white goods store, supply chain is part of your life. Whether you run a spa, whatever, supply chain is part of your life. So understanding it to that detail and having somebody on your team who does is incredible. And then connecting that to how customers are onboarded is also key, I would say.
Thank you for that. Just looking at the headlines in the news today, and I'm going to share them with you and the audience. Indian digital economy to reach $1 trillion by 2025, says Narendra Modi. The Prime Minister said that the key pillar of India's current economic recovery is technology-led growth and government's innovation-friendly policy. Meantime, coming out of Dubai, and these are the headlines, Dubai's next priorities include boosting the digital economy and access to new markets, and that's from Sheikh Hamdan. Dubai will promote an attractive and competitive environment for investment that improves the ease of doing business, contributing to the increasing foreign trade volumes and developing its digital economy sector, the Dubai Crown Prince said today. So we're in the Caribbean, but we're also seeing these global trends. But based on the two examples I just read from, that's government driven. What's the will of our government to lean towards the digital economy to take us to the next step or next level?
Unfortunately, with the intentions of all governments, and I don't want to make any. I don't want you to trap me into making any political statements, but but I would say across the Caribbean, the mandate is probably very common. Everybody is saying things with regards to, hey, let's get our digital economy in our country expanded. Whether that's being put to action, it's entirely different, and it's varying by country. So in Barbados, you're seeing a lot of movement. I would agree. What are you seeing is in the rest of the Caribbean? I'm not sure. Is it coming? I do think so. I do think so that it is coming.
Got you, and thank you very much for that. And absolutely no intent to put you on the spot. So your overarching comments we do appreciate. But having said that, what are some of the trends that you have seen in the Caribbean in regards to the acceptance of the digital economy?
I would say,
And I know you monitor this, so.
well, I think we kind of we touched on it a little bit, but I would definitely what I spoke to before with regards to an increasing smartphone penetration, falling cost of mobile phones and connectivity, customers seeing in the internet as a utility cost versus a luxury good. That's definitely changed. I would also say our ability to compile and collect, like, I mean, that's happening all over the world, but I would say that I'm seeing it differently in businesses now. Our ability to collect large amounts of data and to use it to drive decision making. And definitely on in various industries in the Caribbean, we're seeing changes. So, like, for example, you would use a realtor now how he uses social media, how he uses even, like, virtual reality, how a realtor uses Google Maps. Like, definitely, by industry we are seeing different trends, and different breakthroughs.
Thank you very much for that. One question coming out of well, I won't say the chat because it was sent directly to me. What are the key features of the digital economy?
Um,
Main attributes.
I would maybe the key feature of the big headline statement is the digital economy's ability to convert a thing, a physical product, or maybe even a service, into a data point. So the ability for somebody to access a product or a service virtually and from any place in the world, and from the comfort of your own home, and then access that good.
And we have another question here. They may have missed the beginning, but can you define the digital economy and the real applications for our region? Again, we sort of touched on that at the start, but can you specifically define the digital economy?
Sure. The definition would be an extension of the traditional economy using digital networking and communication infrastructure to provide a platform over which people and organizations can do business. And
That sounds like if we were writing a CSEC or CAPE thing, we will perhaps pass for giving a good definition.
Well,
so fair enough.
yeah. So I mean, how we define any economy is a space in which we can trade goods or services. Like, if you want me to break it down further, and the digital economy is a platform in which we can now trade goods or services, and exchange one service for money, a product for money.
Which leads us straight into the other question I've received. What are the risks associated with the digital economy? And remember, you're talking to an audience of accountants, so we can't get away from talking about risk.
I would say, so, without getting too much into the detail of it, but there's definitely risks for identity theft. There's risks for fraud. I mean, the vessel in which you're transacting, right? So your phone, your laptop, by losing these items, depending on the security settings you have on it, those are the kind of risks you see. From an adoption perspective, the ability for a person to be tech savvy. We also have overspending. Overspending is a huge consequence of the digital economy as well. Like, how you would spend from your wallet versus how you would spend from your credit card on your Amazon account are very different. And then also, lastly, I would say your personal data and now changes, right? Like, your personal data is no longer personal. The minute you interact with a virtual buyer, you have lost some of your personal data.
Other question, how can the digital economy improve upon my business model?
I would say large widening of your customer catchment. So a brick and mortar store kind of limits you to an area, to a region, and then it's blocked by the abilities of a person to access you, right? So if you're in a high traffic area, in an area that's difficult to get to, whereas by putting your business on a virtual space, you've now widened the abilities for customers to access you. You've probably even cut certain steps of your customer onboarding, um, and your ability to showcase and advertise your goods in real time.
Does anything govern the digital economy, Sarah? Do we have involvement of the central bank? Are there any policies globally or otherwise?
I don't know if this is my expertise, so I'm not sure if I could comment on that properly. I do know from like a financial perspective, from the Trinidad perspective, we have like an e-money act that is very robust. It's very robust, and it's still being challenged by a lot of people. From an e-commerce perspective, I wouldn't be able to answer the question. It's not necessarily my forte with regards to regulations.
Okay, no problem, and fair enough. Thank you so much.
No problem.
I guess two other questions we have on the cards. In the news recently, officials say this digital currency or digital economy would help to foster economic development and propel the Caribbean single market and economy, which is, of course, near and dear to all of us, while enhancing financial inclusion in the region. Thoughts?
You broke up, Renata. Sorry, can you repeat that?
Oh, sure. In the news recently, officials say this digital currency will help to foster economic development and propel the Caribbean single market and economy while enhancing financial inclusion in the region. Thoughts?
Sure. I think we touched on this as well earlier. Definitely, there's still a lot of persons who are challenged by the banking sector of the Caribbean, whether they want to actively participate or the banks themselves don't want them to participate. And so there are many people who are intimidated by banking or for whatever reason wouldn't be allowed in our banking space. Our banking space in the Caribbean is typically very conservative. So being in digital currency and participating with wallets on digital space is definitely going to add to financial inclusion in the Caribbean. Like I feel like more people will definitely have more access to funds, to lending, to banking, and just growing their wealth on a larger scale.
Thank you so much. And we have so many examples, I think, across the Caribbean in terms of seeing such wallets at work. If you can tell me a little bit about what transpires in Guyana. I know you spend some of your time there as well, and that wallet has long been in use, a very, practical use with paying bills, etc. We're also hearing about the Carib dollar, Carib coin. Any comments about these innovations?
For sure. So it's what I would like to comment on as well is what I speak to with regards to the overarching space that we consider to be in when we speak about a virtual space. So similar to me saying that Amazon's greatest power is its logistical powerhouse behind them, not necessarily the front-facing website. That's what I think a lot of mobile wallets deal with. So, for example, MMG is the main wallet in Guyana, which is quite a powerful wallet. And as you said, it allows you to pay your bills, to pay many vendors. The other side of it is that you have to load your wallet and cash out your wallet, right? And how you do that in most countries is at an agent, so meaning at a shop or a grocery, etc. And if you want to cover the geographical diaspora of a country, you need to get a wide varying sets of agents. So you need to have agents who live up to particular standards. And in varying countries, so like in Trinidad, for example, the criteria for you to become an agent to cash in and cash out according to the act is very, very, very robust. it's asking for audited financials and varying things along those lines. And if you have like a small shop, more than likely, not more than likely, definitely you're not going to get that. So that removes them from the equation. So MMG, for example, is I find to be one of the most active wallets in the Caribbean, simply because as well, Guyana's legislation with regards to e-money is probably the most, their view is probably the most open. And so to answer your question, I think we need to kind of really look into supporting these wallets and thinking through how exactly do we access them.
Yeah, and I guess this also goes back to the popularity of that wallet. And to that quote that you had in your bio, the unbanked and the underserved are the ones who are using this. But for even those who have banking facilities, I think they've come to appreciate the convenience of such wallets.
Yeah, and so for example, I'll say this, right? Like I pay, there's certain bills in my life that I pay with cash, right? So the guys who would like my contractors, people who just do stuff around my house, like you pay those persons typically in the Caribbean via cash. And if you had the ability to switch to pay them with an app, with a cash app, you would, right? And just kind of touching back on what I said before, like one of the obstacles to that is the ability to load cash onto those apps and cash out onto those apps. So like somebody who I want to pay via a mobile wallet, would he be interested in it? Yes. But what's the major thing for him to be interested in it? His ability to access his money out of this app. And across the Caribbean, the legislation is not really supportive of having a wide access of points in which you can cash out of these apps.
Got you. Thank you so very much. And Sarah, we'll wrap up our conversation by asking you, what are your predictions for the future of a cashless Caribbean economy? Are we there yet? And if not, when are we looking at?
We're not there yet.
Okay. Step one. All right.
We're not there yet.
Are we getting there?
Yeah, we're slowly getting there, you know. I will say this. Last night in you know, I guess not necessarily in preparing for this, but something came up on my Instagram. A young girl who's like, I need to go find her back, 16, 17 years old. And her profile is such that she's a gamer. And that's all she's a Caribbean gamer. And which I find to be quite revolutionary, right? A young girl who's a Caribbean gamer. And she made a post about, you know, why is there not a cash app in Trinidad such that she can buy things virtually on these games? Because, you know, on these games you can purchase, I mean, I'm not very familiar, but you purchase certain things via widgets using cash apps, right? So, and you know, credit cards and that kind of stuff. And she's wondering, well, why can't I do that in my country? I mean, we have such a prolific gaming sector, which I had no idea as well. But is interesting because like that she's 16 years old. She's our future. Like she's I mean, I'm assuming that's her age group, right? Because she looks very young, but that's our future. That's the type of customers we want to serve. So just by her asking that question, it's actually quite optimistic, and it shows a lot of potential for the demand that we have for a cashless economy from the next generation, and everyone else around me. For sure, I'm seeing movements in the payment space, which is what we've spoke to, banking. I mean, from everything I've been reading, one of the next largest banks in the world is going to be Alibaba, which no one saw coming. Movement in the gig economy is coming in the Caribbean, you know, which you could not have definitely in our conservative environment predicted that, you know. Consumer tech savvy behavior, it's definitely improving just from that example I gave you. Even just from younger people, like when I say younger, I mean 7, 8 years old, right? And the way they consume, the way they purchase. And if you think about just in a short, 10 to 15 years, they are going to be the main customers. How are we going to serve them? The economy is going to definitely have to shift. The way we work, I mean, I know it's a topic beat to death by now. It's old news in the post-pandemic life, but work from home has definitely shifted, and how we engage with employees, how we, motivate them, how we pull productivity, how we educate has definitely changed and is continuing to change. I think just maybe 5 years ago, personally, if I wanted to become an expert into something, I would look for places that offer short courses or some sort of college. Now I don't. Now I watch 6 YouTube videos, read 5 articles, and I consider myself a somewhat educated on the topic. So I think the way we work, the way we are educated as Caribbean people, are definitely changing. I mean, there's going to be some bad tests as well, like job losses, because you're going to have repetitive tasks no longer being employed for, because they can be, chatbots can handle them, or various different types of widgets and bots can handle them. But there's going to be a significant shift, more than I think I can predict or any of us understand.
Thank you. And Sarah, with that, we want to thank you for giving of your time and sharing from your expertise. Is there anything else that you would like to leave us with? Anything special that the accountants should be looking for in this
Sorry,
digital economy?
so no, not that.
You're married to one. We're not so special. We
Yes.
get it.
Yeah, exactly. I'm married to one, so that's why I'm scared of all of you. I think with parts in words is continue to have the conversation, and I would say continue to look behind the fanciness of our website and what these products offer, and look behind the business model itself and what it really needs. So things I spoke to with regards to mobile wallets needing a larger access of merchants in which they can cash in and cash out, supply chain initiatives that support these websites. I think when we think about the digital economy and digital businesses, we just need to think about them. I guess I would even say probably in a more traditional sense, or connecting them to the traditional bones of businesses, which is staffing, supply chain, etc. Right? And I think that's one of the things that gets lost when people go out into these new ventures. And if I could leave any part in words, it would be, continue to have the conversations and drill down into how we can continue to improve these types of businesses.
Sarah Radikissoon, Digital Transformation Strategist. We thank you very, very much for your time and your contribution to this conference. I thank you.
Thanks, Renata. Bye.
You're welcome. Now I'm going to call on Andrea St. Rose. Andrea, of course, is I would almost say our next in command at the ICAC. After President David Simpson. And Andrea would just give us a recap of today and remind us of some key takeaways. Andrea, absolute pleasure to see you. Thank you for joining us. All yours.
Thank you, Renata. We have come to the end of today's presentation, and you will agree with me that the presentations were very enlightening. The presenters were engaging and very much in keeping with our conference theme of global interruptions, regional resilience. We started the presentation today with remarks from one of our host sponsors. No, sorry about that. It came from our host, Renita Mohammed, which was followed by one of our event sponsors, EY, in the person of Tracy Marshall. Tracy called on us to unite and act and to utilize our skills to ensure resilience. She touched on the need to understand risks and impact on the sustainability and the fact that disruptions offers opportunities. One of the messages coming across was the need to envision what the world will look like in the future and plan for its long-term sustainability. This was followed by the ICAG President Alison Pratt, who extended greetings and welcome to participants. Alison also stressed on the need for regional resilience as we deal with the global interruptions. Prime Minister Holness shared with us the experience of Jamaica and tourism on the whole as it relates to the region. He shared with us a number of lessons learned as well as the challenges presented by COVID, including the need for increased ties between governments and the private sector. ICIC President David Simpson set the stage for what to expect from our presenters. He also touched on ICAG's commitment to sustainability and the support for the free movement of accountants within the region. Dr. Justin Ram led us on the topic of our economy, our economic recovery, and he looked at 4 main areas: our immediate past, our risks and challenges, our outlook for 2022 and beyond, and new ideas on building resilience. He pointed out that data points to limited fiscal space as the debt to GDP ratio overall is very high. For that matter, just under 80%. His presentation was quite insightful as he touched on the cause of and the impact of inflation and strategies available to address the same. He touched on the need for economic freedom and the need for less government interference. Regarding the need He touched on the need for the private sector to get involved, as well as a change in the manner in which our young people are being educated, and the need for them to be ready for the labor market of the world, not just locally, not regionally, but for the world. Alison Nichols shared with us COVID and business. She touched on how business adopted and responded to the crisis, and shared data indicating a positive correlation between social distances and the loss of revenue for businesses. She also shared with us that businesses led by females were most impacted, mainly due to structural issues. The people impact was led by a generation of young accountants in the person of Crystal Howell, Colin Lifong, and Sharice Ward. They shared with us some interesting aspects with respect to how young people have been coping with the pandemic and the whole change in the mindset and attitudes that came as a result, probably an unintended consequence, if I may say, of COVID. In that people found the time to pursue and work towards new passions. And there is the whole mindset now of the work-life balance. And as a result of that, employers need to be aware of the fact that, people, the young people of today, the whole position is, with respect to work and social aspect, there needs to be a balance, and then that needs to be taken into consideration when interacting. Stephen Phillips helped us demystify the jargon around financial innovation as he delivered on key concepts for businesses built on blockchain. He enlightened us on the concept of NFTs, and I'm not too sure if you're in agreement with me. I have a big difficulty understanding how, some drawing, some little, a picture of a monkey could generate as much as $248,000 because of that it is unique. The whole concept of the metaverse left me a little dumbfounded, because to me it's like playing a game where you have this universe out there where people meet, and I understand you can even purchase a lot in that universe at very high prices as well. And the whole concept of meeting and playing golf and all of that in the metaverse is something that I'm still trying to grapple with. He touched on the issue of crypto assets, digital signatures, digital currencies, decentralized finance, digital assets, blockchain, and the opportunities for digital innovation. I think we can do with a little more in that area because it just piqued my interest very much. Then we moved on to the digital economy led by Sarah, and she led us into understanding the whole concept of the digital economy and the opportunities available for businesses and for financial inclusion. We were reminded that there were attendant risks that need to be addressed, example, the loss of data privacy. Overall, I think the presenters did justice to the topics, and I trust that you enjoyed the sessions as much as I did. For me, the overall take was the fact that if we don't get on board the digital platform, the digital bandwagon, we will be left behind. I now pass you on to Renata.
Thank you. Thank you so very much, Andrea. And in giving a summary, we kind of sat here and took in presentation after presentation today, but hearing it all, it has been a very, very compactful day and hopefully a day of learning. Our theme again for the 39th conference as hosted by the Institute of Chartered Accountants of the Caribbean is global disruptions, regional resilience. And I think we would have ticked the boxes in both areas between our 9 a.m. start till now. Tomorrow's agenda, just as a reminder, please join us again right here from the comfort of your homes or your offices at 9 a.m. EST sharp. And I need to spell out the timeline because I know even our colleagues in Jamaica are 1 hour behind. Tomorrow we will be looking at the elephant in the room, and what we refer to as the elephant in the room. That is the fact that while you and I sit here comfortably in the Caribbean, that there's a war taking place in another part of the world that's having a ripple effect upon us and upon our economies. We will be looking at a Caribbean-born company, Sasha Cosmetics, and hearing about the Sasha Cosmetics story, because despite a pandemic, they have been able to recognize and benefit from global growth. Dr. Ram today showed us some of the markets in the world that we need to be looking at, and one of them includes the entire African continent, and Sasha has actually been able to penetrate that market literally in the face of a pandemic. Professor Adam Della, he is a lecturer with the University of Liverpool, will be presenting to us a little bit of a technical topic, but it will be IFRS 5 as well as IFRS 15 in a nutshell. And we specifically, your executive specifically chose these two because of the impacts of the pandemic and the repercussions and the need to rely on these standards. And because as an economy, we are all looking to diversify, I think our governments have sort of, in a very communal way, made mention of looking towards the blue economy, the digital economy, the orange economy, the green economy. It's a kaleidoscope of economies that's upon us right now. And tomorrow, Dr. Keith Nurse, who is the principal of the Sir Arthur Lewis Community College, will expand upon the orange economy, while Mr. Mark Hill, who is the CEO of Export Barbados, will literally dive into the blue economy for us. Sustainability, I don't want to call sustainability one of those acronyms like we heard from Stephen, but it is an acronym that we're hearing more and more. But it's an acronym that the onus is upon us as the profession, as those of us who run businesses to embrace. And that session will be led by Nancy Foran. Nancy, who we're all familiar with, is now the founder of ESG Partners, Inc. We will be closing our session tomorrow, courtesy EY, and that session calls for an understanding of climate risk and the impact on our organizations and the role that we play as individuals. That session will be led by Charlotte Pugh. Charlotte is the Senior Manager, Climate Change and Sustainability Services for EY. And of course, final closing words will come from ICAC President David Simpson. So we look forward to seeing you again tomorrow morning from 9 a.m. Our thanks to our sponsors. This year, we are completely powered by Ernst & Young and CPA Canada, and to them, we are very grateful. Our partner this year is the Barbados International Business Association, BIBA, who have issued a very early welcome to attend their risk management conference, which will be held in 2023. We're all thinking very much ahead of the game. If you are following us on our various social media platforms, please do so, especially via our LinkedIn platform. Our hashtags this year, hashtag ICAC 2022, hashtag Global Disruptions Regional Resilience. With that, ladies and gentlemen, we thank you for joining us on day one of our journey. Tomorrow, the journey continues. I thank you. Have a good evening.